Hi everyone, Gianni here with you for TheoTRADE, and today is Tuesday, September 9th, 2025, and we are seeing stocks hang out near the all-time highs. We do have important inflation data coming down the pipeline later this week, as today we had a major downward revision in a lot of the jobs that were supposedly created over the last several months. And so this reinforces the idea that rate cuts are coming. A rate cut is coming next Wednesday. The question at this point is whether it's going to be a quarter of a percent, 25 basis points, or a half a percent, 50 basis points. I'm banking on it being a quarter of a percent right now, but I do think that rate cuts will continue for the next 12 to 18 months at least. And so, in theory, this should bode well for stock prices. There are so many sectors in this market that would benefit from lower rates. The S&P 500 is 2 days from its all-time high. You have the Nasdaq that hasn't made a new all-time high in about 4 weeks. So I'm looking for the Nasdaq to start leading again to the upside, especially when it comes to semiconductors. And we're seeing that leadership kind of play out so far today. SMH up more than the Nasdaq, up more than the S&P, being led higher by names such as Broadcom, which ended last week with an impressive gap higher. I do think Nvidia is in the process of hammering out a bottom right now, but there are a lot of semiconductor stocks out there that continue to do very well. One of them being Astera Labs, which is a Trinity trade name that we've been in since July. This has been one of the best stocks in the semiconductor space, and I'm looking for more leadership in this arena. But within the context of tech, I don't think it's a US story so much anymore. You take a look at QQQ here. Well, I think in the near term, you're going to need to familiarize yourself with CQQQ, which is the Chinese technology ETF. I've been talking a lot about China lately, and I think that the DeepSeek revelation back in January has changed the game. And let's be real, there really is no other country aside from the United States that is competitive globally. A large economy, obviously, there are some small countries that, niche technological operations, but we're talking about a massive economic superpower. It's China. Their tech sector is big, their tech sector is real. Whether you look at stocks like NetEase, whether you look at stocks like Alibaba, which by the way is another Trinity trade name, making new highs today, there are all sorts of stocks in that country related to tech. I actually put out an article last week on XPeng that looks very, very strong. So I'm really excited and optimistic about what's coming down the pipeline in China, especially, if you go back and take a look at how the Chinese market reacted last year to the start of rate cuts in September. We've already been rallying higher, so I'm not exactly expecting a parabolic move to the upside like this. But mark my words, lower interest rates does benefit the Chinese market. Lower interest rates in the US specifically, it makes US uh, money, US dollar denominated assets, not as competitive compared to Chinese ones, right? Because US is the financial capital of the world. Chinese is the manufacturing capital of the world. So if we're going to make our financial assets less competitive, well, it's going to benefit international stocks more. And so, we've been seeing this play out in the currency market. The dollar has been rather weak this year, but it is making a little bit of a rebound today against the euro, against the yen. It's kind of flat. You did have the French government collapse. You did have a new, actually, you do have a new Japanese prime minister coming into the picture. But interest rates in the US have been trending lower over the last few sessions. And, the only thing on my mind is whether we will see bonds complete a temporary top here, kind of like a sell the news event going into Fed Day next Wednesday. I know it's, 8 days away still, but markets are always forward looking. Markets are always forward looking. And so, between US tech, Chinese tech, lower interest rates are going to benefit that. Crude oil is not really accelerating to the upside meaningfully. Inflation is not a threat right now, as we have been revealed. It's been revealed to us. Something that we talked about very early on in this year. The risk was not inflation. The risk was never inflation this year. The risk was always unemployment. And so I don't even know how you can say that hundreds of thousands of jobs were not, never existed. I mean, that's well beyond the margin of error and entering into the territory of fraud. So it's pretty amazing to think about how the market has been misled. That's why I tell people not to get so uh, tied up into the data. It's the data that the market uses, but focusing on the price action, focusing on where we are in time, focusing on the money flows, focusing on risk management. That's really what's going to make a difference in your portfolio, not getting all worked up about jobs that existed or didn't exist or inflation that is supposed to be higher than it currently is or not. It's not a very good use of your time. And so, in talking about precious bonds potentially forming a temporary top here, but I'm also looking at precious metals, which have been very, very strong. Gold has actually rallied into my upside target of 37, 3,800. And so, as we have seen this be one of the strongest performing assets in the entire market this year, I would not be surprised if we are seeing the highs of 2025 form now or that are very close to forming. Okay, silver had a little bit higher expectations, was kind of hoping to see it rally into like the 44 $45 area. I don't know if we're going to get that, but we did book some gains in Barrick Gold in the Trinity trade when it hit $28 last week. So we've actually been using this rally in precious metals to scale out of our exposure to the sector. As good as everything has looked, there are some cracks emerging in the rally, and we should be very mindful and careful about that. Let's go ahead and take a look at cryptocurrencies here. Both Bitcoin and Ethereum still going sideways here. Um, I would actually like to see this start accelerating to the upside a little bit more sooner than later. When it comes to Bitcoin, I do have some slight concerns that it's just consolidating the losses here, and maybe you get a final dip to like 104, 105,000 before you bottom out, or we're just correcting here through time. We have that trade open in Hut 8 Mining, which has been very, very strong for us. Another Trinity trade name. Been dealing with a lot of winners in that department as of late. A lot of big stocks moving to the upside, and there's just a lot of things setting up in this market right now. Talking about China, but there's also healthcare slash biotech stocks, Russell 2000. Even got my eyes on quantum some more here too. But what's happening in Bitcoin and just in these mining, these crypto related stocks, to me points to more upside. Now, I also want to take a moment to address the idea that the AI bubble was gone. One of the things we talked about a couple of weeks ago is how people were calling for the end of the AI bubble after we were 2% and 2 weeks off the all-time high. Well, Nebius Group exploded up higher, almost 50%. This is an AI related stock. This is not the type of price action you would be seeing if the AI bubble was bursting. And we also have a $1 million challenge name here in App 11 that also started off this week by gapping up more than 10%. You're seeing additional upside follow through on there as well. So, again, just adds perspective to the idea that, hey, if people are saying the bubble is over, then it's probably not over yet. In order for a bubble to actually become a bubble, there needs to be very few people that believe it's a bubble. You need people to believe it's a new paradigm and the rules have changed. And this time is different. And that's not the type of sentiment that we have in this market right now when it comes to artificial intelligence. And so, AI, cryptocurrencies, Ethereum, that all ties together. You have Fidelity building out, this new infrastructure on Ethereum and whatnot. It's a very exciting time to be alive in this market. The system is changing, the structure is changing, but the rules and the condition of human psychology does not. Do want to take a look at a couple other U.S. stocks here, starting off with Tesla, still consolidating under resistance here. I do like that price action. Google has been very strong. Okay, you had that breakaway gap last week, and compare that to what happened in Microsoft, and you had that gap higher uh, at the end of July, and it's just been fading lower ever since. So, you know, one of the reasons why I'm so bullish Tesla is I'm looking for a rotation within the Magnificent Seven. Tesla, Apple, these are the stocks that I think that can power the Magnificent Seven higher. Meta even looks pretty good, but a lot of them I think just need some rest. Even Amazon starting to press up against the highs. So when I'm looking here at the index level and then the biggest stocks that have the biggest impact on the indices resembles nothing of a bubble. Resembles nothing of a bubble. So we're still early. We had almost a 20% correction earlier this year. That hit the reset button. We're only several months into this new bull trend. You know, I think we need to embrace it. I think we need to embrace it. There's still a lot of disbelief. There's still a lot of naysayers. A bull market climbs a wall of worry. This is all music to my ears. And then when it comes to volatility, we're still hanging out near the lows. Speaking of, okay, trading volatility, shadow clocks by Don. You got to look into it, guys. Take a look at that if you want to figure out and learn more about trading volatility. So that's what I had for today. Thank you all so much for watching, and I hope to see you in the TheoTRADE chat room.